Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be looking at what I think are the best battery plays for 2021. So battery stocks, and more specifically, lithium battery stocks. We all know what's going on in the push for electric vehicles, and lithium batteries right now look to have a long future just in the way that they can be produced, the power that they can hold. So we'll take a look at a few lithium battery stock plays that you might be interested in this year, and I'll share my opinion on each one. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research before investing. And of course, if you like stock market analysis like this, please subscribe to the 40 Finance channel. Help me out by giving this video a like. Really appreciate your support. Thank you to everyone. All right, before we begin, there are a couple considerations you have to have if you're interested in a lithium battery stock. The first one to note is that lithium by itself is generally an abundant resource, and while it does have to be mined, it's much different than like gold or silver or whatever you would call like a precious metal. Lithium does exist across the earth, including here in America. So the concept of a lithium shortage, I would say, is relatively low. And what's most interesting is the price of lithium as an asset has actually driven the production or lack of production of lithium across the past few years. So there was a crash in the price of lithium shortly after 2018 or so, and this actually put a lot of miners on a tightrope because the incentive to mine lithium lowered substantially, and to pay for all the operations that it takes to pull a material out of the earth and get it ready for production, it was a pretty fine line between making money and just doing the work. Now, lithium prices have come back since that drop, but where they stand really makes a big impact on how profitable lithium is. And that, of course, plays into lithium battery stocks, right? Because the price that they pay for lithium is reflected in the price they charge for batteries. So there's a lot of balance in here. And right now, things are fairly stable. But just keep in mind that when you're investing to a lithium-tied stock, the price of the stock is going to be heavily tied to the price of lithium because that's going to impact the profits. All right, so at the top of the food chain for all these battery stocks right now is really two companies. Tesla is far and away the #1 stock, and we'll look at that one here in a second. And it would be followed very closely by GM. So in terms of the means it takes to actually manufacture batteries, right? The facilities, the factories, all those things. Then you have the intellectual property that it takes to make a battery work well, in this case, in electric vehicles for Tesla and GM. But that same kind of intellectual property can also power other types of things down the road depending on how scalable it is. There is this added bonus that Tesla and GM sell for what I call retail prices, right? So they sell their batteries, their lithium batteries, to consumers at retail prices, aka marked up prices. So whereas like a mining stock that we'll talk about here actually has the raw material, they're selling at wholesale prices, so the markup is not quite as high. So Tesla and GM, in my opinion, are probably the best battery stock plays right now, but we're going to start by looking at their stock, and then I'll throw out a couple more options to compare against. Okay, Tesla stock today is $684.20. And what we want to do with all these stocks is really just get a feel for the valuations that they're trading at and where they could go in the short-term future to figure out what is the best battery stock investment for your money right now. And when we look at Tesla, you've got a relatively small EPS of 64 cents, P ratio of 1065. So definitely a high P ratio with Tesla. When we look at the analysis, though, we can see why people are paying a high valuation You look at what the potential EPS gain for Tesla, you go, this is non-GAAP by the way, you go 224 to 422 to 575. So Tesla non-GAAP EPS definitely gaining quite a bit over the next year. And from a revenue estimate standpoint, this is a big year at plus 50% revenue, followed by plus 30%. So as an investor, you just have to ask yourself, is this growth rate and whatever growth rate you expect over the next several years, is that worth, basically 1,000 times their earnings per share? It's not a stock for me at this valuation, but in terms of being a battery stock, it probably does offer some of the best diversification where you're getting in the cutting edge of lithium batteries, but you also get the wrapper of the sort of car company, you get the retail prices. But for me, the price is just a little too high. Okay, looking over at TipRanks to see what the best performing Wall Street analysts have to say about Tesla. My affiliate link for TipRanks is in the description if you're interested in supporting the channel, checking out their product. I use it basically every day. And what I typically do here is I sort always by the best performing analyst consensus. And that basically gets rid of all the analysts that come in on a lower star rating from TipRanks. So 4 and 5 star analysts typically have a good track record within the platform. And when we look at Tesla, I always try to get the latest and greatest upgrades. And all of these have come in. Let's just start here. Over the past 4 days, these are the revised assumptions from analysts. You have buy at 1,000, another at 1,000. Then it looks like a couple, 730 to 900 is where the rest of these analysts put it in. Then you have a super bear here, Craig Irwin. He was the only hold is what he's saying, hold with a minus 78% downside. Guessing he missed a zero in here somewhere is all I can figure. But perhaps he is just that bullish, or bearish rather, on Tesla. All right, next let's take a quick look at GM. Price today of $60, P/E ratio of 1389, EPS of 433. So these numbers are obviously, dramatically under what Tesla's are. And to be fair to Tesla, they've produced a lot more of the electric vehicles when you compare it to GM. Some point as an investor, though, you're going to have to ask yourself, is Tesla worth 100 times more valuation multiple than GM? And everybody will have their own opinion on that. With GM, on a per share basis, you're basically getting, I would say, 7 or 8 times the EPS per share. And you also do have the promise of electric vehicles and a company that has the intellectual property on the battery side for their own unique approach to producing batteries. Now, on the analyst side of the coin, year ago EPS for GM, 490, only expected to get up to 521 in 2021. So that's only a growth of 30 some cents. Then you add another dollar to it in 2022. And here's your big difference between Tesla, right? Sales growth, if you remember, Tesla's was projected at plus 50 some odd percent. 22 was plus 30 some percent. So GM is only offering, and I say only, double-digit sales growth at 13%. That's not too bad for a car company, but to be fair, it is significantly off the pace that Tesla is projected to grow from a sales and revenue standpoint. But if we're trying to look at this from the battery angle, I guess we just have to assume that batteries are going to get a lot better over time. And if Tesla and GM represent your battery play, then in that moment, I would argue that you can purchase GM for much cheaper. So if we are talking just batteries wrapped in car stocks for this video, GM is a lot more affordable from a multiple perspective. All right, on the TipRanks side of the coin, not a ton of updates, fresh updates for GM. This is from 2 months ago. If we go up from there, you have a buy at 65, 68, and 80. Also a hold at 62. So basically you're between 3% and call it maybe a 20% average or so, something like that for GM. All right, so outside of the top 2 picks that I would say are the purest, best play for batteries at Tesla and GM, then we can look at this ETF, LIT, which is the Global X Lithium and Battery Technology ETF. And now we're just going to look through here and see what holdings does LIT have that might be of interest to us from a standalone perspective. Now for this video, I'm only going to focus on United States companies because those are ones that I'm familiar with and I know how their accounting practices work. But there are several foreign entities in this list of holdings that might be worth checking out. And this is sorted, let's just make sure. Yeah, it is sorted by net asset percentage. And at the very top is an American company, Albemarle, which is a mining company. And we'll take a closer look at that one. Then as you go down the list, there are some other names that you'd recognize: Samsung, Panasonic, Tesla is actually in this one. And then a ton of companies I'm not super familiar with, but on an ETF standpoint, or I should say from an ETF standpoint, this looks like an intriguing ETF. If you're like triple bullish on batteries and lithium and you just feel like that everything's in place for this thing to go crazy in 5 to 10 years, you could argue that this is the safest way to play that campaign. Now you are going to get an expense ratio of 0.75%. Let me see if I can scoot this in a little bit. There you go. 0.75% is the expense ratio right now. Now that's typically higher than some of the managed ETFs I see out there, certainly higher than a passive ETF. Switching over to Yahoo to look at LIT, see the price is $59.32. Here's your peak over the last year, and it looks like it hit a high of $73 back around Valentine's Day. Today you're down to $59. So depending on what you think, ETFs, it's not always easy to determine the valuation of all the underlying stocks. Really the easiest way to do it, by the way, in case you were curious, is to almost individually take these top 5 holdings and just investigate their P/E ratio and their projected revenue growth, all the things that we looked at with GM and Tesla. You'd probably want to do that with a number of these top 5 to 7 holdings to get a feel for where LIT is pricing itself right now. But I would say that this is a great theme ETF if you are super bullish on this sector. All right, taking a look at Albemarle Corporation. This, if I was going to invest in a lithium mining company, it would be this one. And the key with Albemarle right now is they're just basically one of 2 companies on the planet with a gigantic lithium reserve that allows them to mine and process lithium at a price cheaper and faster than most any other companies. That second one is SQM, and this is a Chilean mining company. I'm not even going to try to say the name there. But when you're talking about the big dogs in mining on the lithium side, it is ALB, okay, and SQM. Of those 2, I personally would buy ALB. You can see how the price of it is very similar to some other stocks we've looked at. It reached a peak at 184 down to 145. You have an EPS of 352, P ratio of 41.42, and you also get a 1% dividend from ALB at this current price. All right, looking at the analysts, we've got year ago EPS of $4. That might drop to $3.49 if their forecasts are correct. That could drop to $3.49 in 21, then bounce back to $5 next year. Sometimes this happens through acquisitions or increased capital costs for the mining operation, but it seems like earnings per share could go down next year. Growth front, only less than 3% growth projected, so potentially going from $313 billion to $321 billion, and then picking up the pace a little bit next year. On the TipRanks side of things, we have several analysts coming in about 2 months ago, and you've got a buy at 184, 190, 162, 186, as well as a couple holds and sells under this 135 mark. So I'll say that ALB right now is in an interesting place. You could wait for a red day or a down day to try to pick up the shares cheaper than they're being offered today at 145. All right, next up on the board is a company, Livent Corporation. This was a spinoff of a larger agriculture company, FMC. And I think the spinoff is one of the parts that makes it sort of attractive to me. FMC is a very big company in terms of agriculture, biotech, if you will, when it comes to pesticides, biological solutions for helping plants grow stronger and faster. So they had this lithium division and they decided to spin it off separately, which is probably a good play in this era. And there's something attractive about this to me, mostly because FMC has a pretty good history of managing business. Now, right now, not all the pieces are there. So you have a minus 13 cent EPS, obviously no PE ratio. And if we go over to the analysis tab, we were negative 5 cents a year ago EPS. That could grow to 12 cents this year, and then potentially to 33 cents next year. Now that's still a pretty high PE ratio, particularly for a mining stock or a basic resources play. But I still think Livent's probably worth watching, particularly if it takes a steep downward trajectory, because down below you see on the revenue estimate they're supposed to grow 22%, basically plus 20% over the next 2 years, going from $288 million up to $351 and then $422. So that's a pretty good growth rate for a basic materials company. All right, on the TipRanks side of things, we'll start at 2 months ago. There's not a ton of coverage on this one. You've basically got a hold of 17, couple buys at 24 and 23, and another hold at 19. So there's probably some flat to plus 10% upside for this one in the short term, call it over the next 12 months. However, you do have to wonder if you might be able to hold out and get this one under 15, maybe closer to $10 if there was a major market correction. But like I said, the fundamentals of FHM and what this business is, it is intriguing to me, but I can't say that it's a guaranteed winner. You're going to have to take some chances at this current price. All right, speaking of taking chances, the last stock I'll cover here is QuantumScape Corporation. This is a company that literally has not sold a single battery yet, but they have come up with a new, what they're calling solid state lithium metal battery. And the big pitch on a solid state lithium battery is that it reduces charge time, it prolongs the life of the battery, improves safety, and lowers cost. All right, so all of the big things that go into the consideration of a battery, particularly at the electric vehicle stage, Quantum is trying to address that, and they believe they have. with this intellectual property that creates a solid state lithium metal battery. But here's the catch. It is only tested in a laboratory. It did get some interest from Volkswagen. I think they're partnering, or Volkswagen bought a share of the company, something like that. But you know, here's the stock at $47, okay? And you have no earnings, no PE ratio. I did a video on what I would call story stocks a few days ago, and this is a story stock. There is no fundamentals behind it that says this company is going to be doing anything, quite frankly, because they haven't shown it in the past. However, you are banking on someone owning the proprietary formula for making batteries significantly better over the next 2 to 4 years. All right, on the TipRanks side of things, only a few analysts are bold enough to come out on this one. A couple months ago, we've got a buy at 70, hold at 48, hold at 52 1 month ago. You know, this could go anywhere. This really could go anywhere. And it's not the kind of stock that I'm interested in because it is high risk, although also high reward if it hits. I would just say that you're looking for a red day on this one. I'm going to go back and see when the market was having its mini meltdown. I was curious what QuantumScape got down to. It looks like March 30th you had a low of 42. Over in March 4th, you had a low of 43, 42, 43. So if you're looking on the low end, 42, 43 is about all we've seen so far for QuantumScape. But tread carefully on this one. They could definitely be a game changer. They could also find out in their lab studies that their battery technology does not work or it does not scale as anticipated, and poof. This one disappears and you get zero value out of it. All right, guys, so several different ways to play lithium battery stocks in this review. GM, Tesla, the ETF, and then a couple other onesie-twosie names to consider. No doubt that the lithium market looks very promising for the next 2 to 3 years. The hard part is probably after that, right? After the next 2 to 3 years, what happens? You know, how far along can scientists invent the next greatest thing? And will it use lithium as one of its core components, right? So there's a lot of different angles to this. So however you decide to invest, make sure you have yourself protected to the downside. If you're going to invest in a QuantumScape and go for broke, then you want to balance that out on the other side with some sort of company, ETF or otherwise, that has a better chance of producing revenues, perhaps not quite as high as the potential that QuantumScape has. But take like an Amazon for an example, that's literally going to be printing money for the next 2 years. It's never just going to blow up again like it once did and go 100x, but it could balance out your QuantumScape and allow you to take a chance on that stock. All right, guys, thanks for watching. As always, please give me a like and subscribe. We'll see you on the next video.